What is good, traders? Welcome to the second episode of the series where we are going to start from zero as a profitable trader and build a model from scratch. In today's video, what we are going to try and do is to establish a strategy that we can initially approach the market with, set up a data set, and try to get some backtests and to review some data. So let us get started with that. I'm going to be using Notion to actually establish the data set. If you have never used Notion before and you want to quickly learn how you could set up your own data set, and we're going to do it from scratch anyway, but I do have a video on that covers exactly how we constructed this and how it is useful to get data from it. But we're going to start from scratch anyway, so if you want, you can just follow along and copy this for yourself. So I'm right now in Notion, and I'm simply going to hit create, the little plus icon right here, and I'm going to call this the FEG continuation. There we go. And then we are going to do /table. And then we have the table view. We're going to add that. And this will create a little data set. Next up, we will do a /h2, which is a heading 2. So this is a title. You also have a heading 1. I like the heading 2. So I'm going to hit goals. And right below here, I'm going to hit the to-do list, which is basically just checkboxes that you can check off. So we have to do quite a few things today. So first, we're going to get started with actually defining the strategy. So define a strategy. That is done. So let's say establish a model. That is done. So next up is going to be define a strategy. A strategy is much more than just simply trading a model. We need risk parameters. We need all kinds of things. And I will cover that in just a second, how we're going to approach that. We're going to keep it very simple. We're going to be able to trade absolutely every single session. We'll get to that. Next up is going to be to build a data set. And with data set, I simply mean this table. So we're going to have to define some properties that will be useful. We're also going to build a template for one single pair, which is going to be EU. Then we're going to backtest 25 trades. And of course, we are going to journal them. So plus journal. Then we are going to review those 25 trades. Then we are going to backtest another 25 trades. And as soon as we've done that, we have like a little data set of around 50 trades. And with that data set, we can already start checking out whether we can implement the confluence, meaning do we see a significant pattern in those 50 trades? If we go through these 50 trades, put them side to side, which we will do in these videos, we are going to immediately see like, hey, something's off here. I'm seeing something. And that is what we are going to be using. So we're going to do a review and look for a confluence. And then we are going to add that confluence in the data set. And then we can immediately see, does this confluence actually work? Will this confluence actually increase our win rate or not? That's going to be the main thing here. So right here, I'm just going to do a H1. I'm going to call that data set number 1. And let's actually get started on this data set. So we're going to call this FEG continuation. And then we're going to call it number 1. Cool. So with that out of the way, let's first quickly create a template. Now, a lot of people do not know how to create templates. You have multiple options of doing something. So right here, it's going to have the name property. When you're in the name field, you will see this open appear. This is only going to happen in this name field. You can actually rename this. You can call it, let's say, pair, which I'm going to do in this case. So as soon as I pair, what it's going to do is going to display right here what pair I'm trading. So let's open this up, right? If we click the open, we can then see this open up, which is a separate page that we're going to be able to open and collect data in. We're going to go to create template. And then what I'm going to simply do is I'm going to type Euro USD because that's the first thing we're going to be backtesting. And what we're then going to do is we can already start to define how exactly we want to collect data in here. So what I'm going to do, for example, is I'm going to say heading number 2. I'm going to say higher time frame screenshot. And I'm going to do a lower time frame screenshot. We go. So we have two things now. And what we're going to do is we're going to just leave a gap so that we can quickly copy and paste it right in here. And we're going to have a URL and possibly another image. So let's leave 2 gaps here so that when we load this in, we can instantly add this. And when our data set becomes very big, it might be very difficult to spot Euro USD. What we're going to do is we're going to give it a little color. I basically like blue for Euro USD. So we're actually, let's just use this here. Green. Perfect. So now, as you can see, we have the nice little dollar sign and that then says Euro USD. Very clean. I do believe that you have multiple options of like creating dynamic trades so that, for example, this would be number 1, number 2, number 3. So it basically counts the trades for you, but I will also show you a little hack for that. So below here, for example, what we can do is simply say, I want to count all values, which means that if we start to take more trades, we are going to have the exact count of the amount of trades that we are basically going to be taking. Cool. Now we basically need to get started on the properties. A property is basically something like the name right here, but this is going to be our unique ID that will be behind it. And that's basically the ID will be behind this little button here. So that needs a unique identifier. So if I try to delete this, that's not going to be possible. So we're going to try and create some new things. What are some very interesting things that we already would like to know about our system? I think some first initial metrics would be, is it a win or a loss? So I'm just going to do win. And this type of property is going to be a checkbox. There we go. So now we already know, is it a win or not? And then below here, what we can do is we're going to see percentage check. So right now, let's say these two are winners. We see 66.66%. Perfect. What else would we like to know? Let's say RR. So risk to reward. That's what that means. So we click that and then we basically say it's going to be a number. And then because it's a number, what we can do is get the total count. So let's say I make the sum. So let's say I win a trade, I lose a trade, and I win a trade. It will basically say you have 1 R gained in this specific data set. Next up, what's also very useful to know, direction. And what is direction going to be? We're going to be taking the select. In this select, are we going to fill? So we're going to say short or long. And I like long to be green and I like short to be red because that makes sense to me. Cool. So now we can basically say long, short, long, for example, and then we would be able to see if we filter, which is going to be a next step for when we have the data set, we will be able to see if most of our winners are longs or shorts. And based off of that, we can basically know, am I good at spotting shorts or am I better at spotting longs? Next up, going to be the session. So for session, what are we going to say? We're going to say select, and we are going to trade 2 sessions because that's the only time that I'm awake. So that's the only time that I will be able to backtest. So we're going to say session, and the options are going to be New York, which I like to be red, and London, I like to be blue. So now we have these parameters. Let's say we won in London, lost in London, and then won in New York. Now we have that nicely filled in. Next up, a very important one that not too many people do, because we are backtesting and we might be emotional because of the wins, the losses. Let's say we face a losing streak and we're like recording trades. We have to review that they're valid afterwards. And that's the step that we have right here. So we're going to have a checkbox, is valid. And here we can then check if the trade is valid. We can verify it like that, and then we'll know. Something else that might be very interesting is going to be the hour of the day. Curious, but perhaps we will be able to see that if we trade at 10 a.m., it's going to be much more lucrative than if we trade at 11 a.m. So hour of day, New York time, for example. And I be as extensive as I possibly can, because if later on we come back to this data set and it just says NY time, we might just not know what this means anymore. So make sure that if you describe these properties, you be as thorough as possible. And I think this is a very good data set to start with. So we now have 5 parameters. We can check what direction we're good at, which is our favorable session. We can see if the trade is valid. Let's put that in the back. And then we will also be able to see at what time of the day the positions will be most lucrative after we have the small data set. Cool. So let's get rid of all of these. And let's actually discuss, because now we built a data set. Now it's time to define our strategy. So how am I envisioning the strategy? So we all know that we're going to be trading the FEG continuation. Quick recap, we're going to look at the 5 or 15-minute chart. We're going to wait for price to really show us a direction like this. So we're going to wait for a sweep because liquidity is going to be our main thing. And then we're going to look for an FEG. So it could be that price runs here without us to the downside, does all of these things, but we know that we're trading away from this. So then we're going to wait on the 1 minute for liquidity to be taken. So let's say right here, we're trading away from this particular high. We're then going to go to the 1 minute and we're going to be waiting for a sweep. So imagine price is doing this, we take out these levels and we start moving away, right? This is going to be a sweep. We're going to assume that that is a sweep. And then we have a fair value gap. And as soon as that is confirmed, which is by that third little candle, as soon as that is confirmed, we can then put a short right here with our stop loss above the high. And we're going to always target 2R. So this is already a part of our strategy. This is our model. So we use the 5 or 15 minute for our bias. And then we're going to use the 1 minute for entries. And then our risk parameters are going to be, we're always going to be targeting 2R. Cool. Now we need to know how much we're going to be risking. And we're going to probably adjust that throughout the process, but we're going to try and assume that we are trading prop firm conditions, because I know that a lot of you guys want to be trading prop firms. So prop firm conditions are very simple. We have 2 main rules that we need to oblige to, or we lose the account or challenge. So the first thing is going to be minus 5% overall daily drawdown. I think that is going to be main on every single prop firm. No? So it's called a DD, which is daily drawdown. We're also going to have to take into account that we are going to be taking a max drawdown. So MD, the max drawdown is going to be 10% usually, right? So with these 2 parameters in mind, we're going to have to calculate how likely it is that we will be losing such an amount in a row. So if we know that we right now with the backtest that we've already done that I showcased in the previous video real quick, which I did in journal, of course, just to get an idea of the particular win rate, we can then actually see that we win about 45% of the time. So let's round that number up for easy maths to around 50%. And now we know that we will lose one trade, win one trade, but in not a specific order. So it is very possible that if we take 10 trades, that we will lose 5 and that we will win 5, and in no particular order. And on 100 trades, we will be able to lose 50 trades in a particular order, and we will win 50 trades in any particular order. So it could very well be that we actually take like 5 or even 10 losses in a row. So we do not want to be risking 1%, because if we lose 10 trades in a row, the account is gone. If we lose 5 trades in a day, the account is gone. So we definitely don't want that. So what are we going to do? Let's take a look at 0.5%. In order to blow an account in a single day with 0.5%, we will need to be taking 10 trades. 10 trades is a lot. I don't see myself taking 10 trades in a single day like ever. No one should be doing this. You're definitely not going to get these types of opportunities on one pair anyway. So very safe to say that 0.5% is going to be a good risk set to get going with, because we know that in those 10 trades, and we can afford to lose on one single day. If we win half and lose half, we will still be up in the green, and we give our edge more room to basically play out. So very good. Now, we don't want to be trading all day or pointlessly, right? So we need to define specific rules. So we're only going to be trading the London session and the New York session. That's something we already know. And then what we also need to do, and this is just me making this up, right? So this is not something that I planned. I had a quick think about it, and this seems viable. So we are going to take a max of 4 losses in one single day, or we are going to take a max of 4 wins in one single day. What will that account to? Let's say we take 4 losses on a particular day. That would mean that we are down 0.5 times 4, right? Which means that we will be down 2%. We're down 2% on a losing day, and we are up. Let's do the same math here. We risk 0.5%. When we win, we do this times 2 because we are using 2R, which is 1%. So if we win 4 times, we will gain 4%. Perfect. So if we lose, we have minus 1%. And if we win, we have plus 4%. Cool. Now that we know that we have a 50-50% chance of winning 4 trades versus losing 4 trades, we can assume that in a series of 10 days, we will have a 50% chance of having 5 winning days and 5 losing days, right? Which means that, let's assume we have the following kind of day. So we have a day where we have minus 2%. Then we have minus 2% again. Then we have plus 4, minus 2, minus 2, and that is 1, 2, 3, 4, 5. And then basically the same data set that we have here. So again, minus 2, plus 4. And then now I think we need to win everything. Plus 4. Wow, I cannot write with mouse and keyboard. I apologize. We need to win here. So that's going to be like this. So if we now count up all of these days together, we have minus 4, 0, plus 4, 0, minus 2, 2, 6, 10. So overall, over the series of 10 of these trading days, if we know that these are the percentages that we're going to be up or down, we are going to be able to make 10% in 10 days, like averaging statistically, right? So that looks very good to me. Now, it could, of course, be that we have 5 consecutive losing days. Something like that is called the risk of ruin, and that is something that you really need to worry about, but only if you trade very large capital that you cannot afford to lose, right? So if you, for example, only are going to be trading 10% max drawdown of a firm account, your risk of ruin is going to be pretty high if you risk 0.5%, because you are basically risking 1/20th of your account on every single trade, right? On your live account, if you're going to be risking 0.5%, the risk of ruin is going to almost be non-existent. So keep that in mind. You will probably somewhere in the future lose your funded account. That does not mean that your strategy is bad. Just keep that in mind. You have a risk of ruin calculators. So risking 0.5% with a 50% win rate. You have an average win of 2 and an average loss of 1. Risk per trade is going to be 0.5%, right? Number of trades, let's simulate 1,000 trades. Let's assume we lose 100% of the account. What's going to be the risk of ruin? We have a 0 risk of ruining the entire account if we risk 0.5% on a live account where we can basically lose 100% of the capital. 0% chance of blowing that account. Now, if we do the math for 10%, your risk of ruin is 0.03. So that means that there is a chance that you will once in your lifetime blow the account. If you calculate in human error, then of course you will see that it's going to be way bigger than that. Cool. So let's jump back to FX Replay, right? We need to actually start collecting some data. Alrighty, so we're right here in FX Replay, now that we have our strategy, we can actually start testing it out. So what I'll do is I will be trading this. I will record all of the trades taken in the Notion file and I'll also show you the analytics at the end, but I'm not going to bother you with a backtesting session because trust me, this can take very long. So what I'm going to do now, it is now where I am at. It's 10:30 p.m. So I'm going to be backtesting till around 11, I think, take a short break and fill the data. But I will keep recording, so you will be able to see every single trade that I take. But in the meantime, I will be listening to some music. I hope the audio quality is not going to be too bad. Right, so for the backtesting, what I will do right now is I'm going to just show where we're trading away from. So I feel like we're trading away from this specific high. We took it out. We saw price basically go below this level, which means that it is no intent of liquidating and continue to the upside. So I'm assuming that we're going to be heading to over here or something. But that doesn't really matter for this model. So we're just going to jump to the 1 minute and we are going to be waiting for liquidations here on the 1 minute. Cool. So we can already see a liquidation. We have one here, a very small one here, but that is possibly like inaccurate candle data of FX Replay. This one is very obvious. So let's take this one. We have a fair value gap. We have a sweep. So we enter. All right. So it seems like we didn't really get to that fair value gap. So let's remove this and let us take the first one here and target QR. So we can already see that the stop loss is going to be very variable, right? So right now we have a 4 pip stop loss and I'm sure that some will be bigger and larger. This is possibly something that we can include in the data. We have to observe that, right? All right, so this is going to be a loss. So what I'm going to do is I'm going to quickly record that in the Notion. I'm going to do a screenshot of the 5 minute and one of the 1 minute and basically put that in there. Alrighty, so as we can see, we liquidated once again. We now have displacement down to the fair value gap. So we're going to take an entry, stop loss above the high that swept. Target is going to be the lows. And I see that it's not a perfectly rounded 2R. We do want that. All right, and this also turned out to be a loss. We are still trading away. I'm going to also record this one. And because I'm journaling, I want to keep them as clean as possible. So we definitely want our journal pretty clean. So what I'm going to do, I'm going to just remove the previous trade, focus on this one, copy the image, and add it to the list. All right, and we continue. And once again, I see a sweep, and I think I'm already starting to identify a potential issue with the model, and that is not something that we'll be looking at right now. I'm just going to be taking the trade because I need to take the trade because the model is basically telling me to, right? And there we go. We actually get a beautiful winner. So now we basically made the 2 losses back and are back at break even. So let us record this one as well. Cool. Let us continue. As you can see, we have another sweep. We have a fair value gap, so we take a trade. And as you can see, this is what I'm talking about. So right now we can see that the stop loss is only going to be 1.5 pips. So it's also very important that we investigate something like that. And that's something that we will likely add to the data set in the future. All right, and we took another loss, and I am noticing right now that I took this trade outside of the London kill zone, which is not something that we're going to be trading. That's part of the strategy, which means I'm going to journal this, but we are going to be able to identify this trade as being invalid, most likely in our data set. And it's very important that we do that because while backtesting, we are focused on getting the entries, we are looking at price, so we might miss stuff like this. So what I could do right now is, oh damn, I took another loss. I'm mad about it and I'm starting to tilt and force stuff. Well, in fact, I just didn't trade a valid strategy. You know, this is something that I see happening quite often. So I cleanly record this as well. Alrighty, another trade. So yeah, we did not really sweep here. So I'm not sure. This data might just be a little corrupted. I would take this short. All right, cool. So now we do have a sweep. We built up these relative equal highs right here. We took them out and are now displacing lower. So we have a very small fair value gap. Let me show you. Very small fair value gap here so that we can take a trade off of that. We can put our stop loss right here and our take profit is going to be 2R. And as you can see, I'm on purpose placing my stop loss a little bit above the high because that's something you're going to have to do on your broker or prop firm as well. And we take a loss. So we are going to record this loss. And I know that taking losses is not fun, but it is something that's part of the game, you know, so we have to do it. We are not touching our ego. We are simply trading our strategy. It could be a winning strategy. It doesn't matter. We're investigating. This has nothing to do with ego. I see a lot of people already giving up right here. So right now we are down around 4K and that's on a 400K account. So that's around 1%. And people already start to tilt because of this. 1% drawdown is going to be very common. So always keep in mind not to tilt even when things are not going your way. All right, so we have another sweep right here. And now I'm really starting to think that this data is not good at all. Perhaps this was like a holiday. I don't remember, but this is very bad. Honestly, these candles, they don't make any sense. All right, we are going to take the trade anyway with the data that we have. And if we see that this particular day in our data set is not consistent with the others, we might have to consider that this, might just not be a quality day to day. So this position. All right, and this trade was a very quick winner. So let us collect the data on that. And now we're back at break even, by the way. All right, and by looking at the 5-minute chart right here, a lot of you guys will likely be thinking, hey, we are trading away from this now because we broke structure. But we have to look at the bigger picture. If we would have reversed and if we wanted to continue back to the upside, we would have, in my opinion, of course, we would have likely done so right here already. We had no business going back down. To me, what we're doing right now is we are building liquidity. So we have only liquidated the Asian session, which is basically the same day. So to me, that is not enough. I would like to see at least the New York session from the previous day or the London session go and then have a reaction there. And that is the point where I will be trading away from it. On the 15-minute, you will also see that this probably doesn't really hold significance. Just, it looks like a sweep to me, right? Anyway, let's continue to look for shorts because we're still trading lower in my opinion. And that is perhaps where discretion come in, but if you train a model time and time again, you will learn to look at this because you're identifying this, you're collecting data on it. If you keep on studying something, eventually you'll figure it out, you know? Alrighty, now we can see that we're making some momentum, right? So we're really making some momentum to the downside. We're going to just smack a trade on in this fair value gap. Let's see, a really big stop loss. So we can now think, we don't really have rules on this. Are we going to take it here or are we going to take it here? You have to be consistent. I think this is quite a big fair value gap. I'm going to take it in the upper side of the fair value gap to have like a shorter stop. And then we can also target the previous day low as we can see. So that's not a confluence, but we heard it in an ICT video once. Let's call it like that, you know? So let's see. A loss. All right. Let us collect the data on that. And by the way, as you can probably see, the strategy is giving quite a bit of setups, right? Here we liquidated relative equal highs, as you can see, push lower, have multiple fair value gaps by now. See, pushing back short, targeting to R is the New York session low. There we go, a win. And as we can see right now, we have a massive move, like the megalodon of a move, right? We are running above that previous day high. It looks like we are now trading away from this. So we now have to flip bullish. So it seems like the London session right here had all the needed liquidity to start pushing back upwards. Does definitely look logical. So I was mentioning that this point right here was not a valid point for reversal, but a lot of the ICT and SMC traders were seeing what? They were seeing breaker structures, change of characters, right? So everyone who was entering off of these fake order blocks, they were all entering. We now stopped them out just before news and pushed upwards. So we're going to just jump to the 1 minute. We're going to wait for sweeps and see if we get an entry before the New York session ends. And we take another L. Big L. Alrighty, so if we blindly follow our strategy, which we're going to do because it's very important that we do so, now I want you to understand it, we are still going to be trading away from this point because we had not really broken the structure which initially made that whole move to the upside. So we are still trading the upside, right? We are making these moves and we can clearly see that we're building liquidity. We're still going to be looking for longs. Very important that we do so, and later on we can investigate whether that's a good idea or not, but for now, we're just going to rely on what we know. All right, so we can clearly see a sweep right here and we are starting to push higher, so that's a trade. W. L. As you can see here, we have a win. So the fair value gap was not that clear, so I decided to quickly draw it out for you guys. A nice 2R here. Alrighty, sometimes this feels super strange to take these trades, but we're going to have to take it. So we're going to take a long here. Well, it feels very strange to take it, but technically we had a low here, we ran below it, and then we pushed up. So as traders who have not studied sweeps, we're going to take this trade. And lo and behold, it's a win. Sometimes, yeah, you know, I'm biased, you know, I really thought this was going to be a loser. I really thought we are going to push lower, but studying the strategy, trusting the strategy, that's all we basically need to do. So yeah, very nice. We are now up 2 Rs. So that's 2 days of trading, by the way, guys, with 0.5% on a 400K account, that's 8K. I think a lot of guys could already call it a month, right? Making 8K is not bad. And while this trade is actually still marked up here on the charts, we have another setup going on here. We had a sweep. So I don't know what the CUN is, but whatever. So I'm going to take another long. Again, this feels very weird, not going to lie. But it makes sense to take out the previous day's high. So let's see. All right, so this one is now running and technically we have another setup. So we can definitely take that. So here we have a sweep. Here we have a fair value gap, and here we have a low, and we target 2R. Right, so this one is a win. We're going to already journal the winner here. We can remove this one. And this one is also a winner. So let us mark that one out. This one was taken here because we had a sweep here. So let me keep that marked out. And that's actually the fourth winner in a row. As you can see, that's how RNG works in trading, you know? And I say RNG, I don't know if I believe in RNG too much, but it basically just connects with win rate, right? So if you have a 50% win rate, you're going to face a random amount of wins and losses, randomly distributed. So yeah, right now we are up 8 Rs. So in order to have a negative outcome through the backtesting session that we're doing right now, we would have to lose, because we can take 9 more trades. We would legit have to lose every single one of them. And then we would be down 1. And otherwise, if we lose 8, now we're at break even. So I mean, that's pretty nice, right? This model is not bad. And what I'm doing here is not like magic or something. This is something you can do as well. It's super simple. The problem is no one executes because they face a few losses and they say, oh, well, I cannot trade. And the model is bad, but that's not the case. You just need to be persistent. And I'm showing you that in this whole series. And I think the London session is over. So we're going to bounce to the next one. I think I clicked next day, guys. So we missed this session. I think I see some beautiful entries here. Oh my God. So we're still trading long. So the first trade that we could have taken was this one. We then had this. And I think what I'm going to do is I'm going to just record them in the data set, because it would be sad if we don't, right? And we basically lose a day worth of data. Then of course we won't have the stats on FX replay, but that's fine. So no entries here. Here maybe. It's not really a sweep, is it? Here we have a sweep. No entries, no fair value gap, no sweep. Zoom in here. I think it's like 2 trades, so it's not too bad. Right here, we have this fair value gap, but we don't really know where we would have taken it, right? Most likely, if we stay consistent, we would have taken it down here and 2R. And let's see, if we had to take out like the extreme high with that, that wouldn't make us 2R. So if you would have taken this, it would have been a loss. And if it would have been this, then it would have hit. But we're not going to count that as a winner or a loser because it could have been both. It really depends on how we execute, and we didn't execute, right? So the only real trade that we have, I think, is going to be, this one. The others didn't really have fair value gaps. This really wasn't a sweep. We didn't sweep anything from before. This was just a leg down, in my opinion. And by the way, we're still trading bullish. We haven't traded away from the buy side yet. So yeah, I'm going to record this particular trade here. By the way, I'm quickly going to be trading the Asian session to make that 2R. So I'm going to use my personal knowledge. We will not record the exact trade that's been taken. I'm going to try and squeeze out a very high probability 2R trade based on my personal knowledge, just so that we have perfectly replicated data in the FX replay. So the data is now consistent again. We can continue. We're now looking for shorts. We have a running trade and we have a new opportunity here. So we're going to take it and see if we do losses or actually 2 wins. Who knows? We'll see. Right, so it's going to be a win and a loss. So that's good. That's 2 pieces of data in one go. So that's good. All right, funny story, but we actually have to stack a third trade here as well because we had a clear sweep. We now have fair value gap. So we're going to execute on this. Let me spoil it for you. It's a loss. Right, we are now at 20 trades. It is now already 11:20 where I am from, so that's PM, right? So had a full day of data collection. Forgive me that I'm not going to squeeze out 5 more, but I'm legit tired. Need to get up really early in the morning. So guys, we're going to proceed with the video, right? I still have shit to do, so don't worry, the video isn't done yet, but you know how much work this is, guys. Like not only just collecting the data, coming up with the IDs, but actually doing the work for you, recording, speaking, editing the video, you know, all of these things, they take so much time. So please, if you're watching this video right now, please leave a like, leave a comment, show some support, show some love to really push me to keep on going with these things because it's not easy, guys. You know that it's not easy. That's why you're watching this video and not doing it yourself, right? So I would appreciate a quick like, subscribe, show some love, guys. Come on, comment. Alrighty, so here we can see the equity curve. Beautiful, beautiful, beautiful. So we have an average RR of 2. We have a max RR of 2. Apparently we have an ideal RR of 21 and a max ideal RR of 88.15. So that's pretty damn crazy. But overall, as we can see, we generated 5% with 0.5% risk. I think our total drawdown, that's something we can easily see here. So average loss streak of 2. We have an average win streak of 5. A winning streak of 7 trades. So that's pretty damn insane. The win rate is right at about, I don't know why this says 50. What did I miss? Because I have a 55%. So let's actually study this. This is something you actually have to do. At one loss, two loss, yes. Win, loss, yes. Win, loss, win. And two losses, yes. Win, loss, and win, win, win. Oh, here we actually had a loss. I see. Yeah. Okay, I messed up. I made a mistake. It's on me. It's on me. This is not a win. This is a loss. We had that one loss and that one winner at the end. And I basically just duplicated the item because it was the same screenshots. And I left like the 2 RR. So win rate of 50% consistently over 20 trades. That's not enough data once again. But now if we look at the previous backtesting I did, we already have around 45 trades, indicating that this strategy is actually somewhere in between of 45 to a 50% win rate with 2R. So the strategy is fucking golden, guys. Like the foundation itself is already so strong. You have such a strong edge. Literally, if you are risking 1% per trade on an evaluation phase, which you can do if you want to do them aggressively, dude, you would have passed in what? 1, 2, 3 days. In 3 days, you would have made 10%. Like, this model is not difficult. It's super easy. Anyone can trade this. You just need to collect data on it and assess your live trading. That's it. Cool. We're going to continue with this later on. I'm going to end it on this specific note, showing you this data set, and we're going to continue working on this data set in the next video. And I will also do a review there. But for now, we're going to end the video. Again, guys, this takes so long for me to make, so show some love. Like, please show some love. I only expect a like, a little smiley face in the comments, doesn't matter. And a subscribe if you want to keep on following these series, because we have only just gotten started. Remember that the goal is going to be to reach funding. Like from zero, we're going to build up funding and we're going to get a payout. Simple as that. Cool, guys. Thank you for watching. I will catch you in the next episode. Bye-bye.